Hey, thanks for being with us. We're going to be talking about earnings season that's coming up again. Tomorrow, we're going to see the earnings from some of the big banks tomorrow. Goldman Sachs, Bank of America, Wells Fargo, Citigroup. They're all reporting their earnings, and it's going to give us a good idea of what to expect in this next quarter. So stay tuned. Hi, I'm Adam Anderson, owner and founder of WealthGuard Advisors.
And I'm Blake Anderson, certified financial planner. Thanks so much for joining us.
So Blake, let's look at the S&P 500. It seems like we've gone kind of flat. I know last week I was talking about hitting 7,600 and I inadvertently said 6,700 in my video, never corrected it. So if you want to go back and make a comment about how lame I am, you're welcome to do that. But 7,600 is really what we've been looking at. And if you look at the chart here, we are so close. It's about 1.5%. I talked about last week that we have a great month in July historically. Usually has 1.8% on average. So could we see that happen? I'm hoping to. I really love to see 7,600 for our 250th anniversary of our country. But we will see what happens because right now we have a lot of headwinds that we're running into.
Yeah, especially with the added inflation concerns, especially around energy. We had the Federal Reserve meeting minutes, so we got a little more insight into what they were thinking and talking about. That came out last week, and they were concerned about that. Also, interest rates. We're seeing really narrow credit spreads, and there's just a lot of concern. So we'll hopefully be getting some clarity as these banks report earnings this week. We'll see a little bit of insight through their investor conferences. Hopefully, they provide us some more information on what they're seeing. Obviously, these big banks are moving tons of money through them, so they have a little bit of an insider insight into that side of the financial market. So it's definitely something we're watching.
Yeah, we'll definitely get some a little bit of color on what to expect in the future as we hear the bank's reports. But talking about energy, we have been seeing energy prices starting to spike again. I guess the Strait of Hormuz not being officially opened, they're still having this conflict in Iran. I do watch a video of the people of Iran are rising up, trying to overcome the Islamic Republican Guard people and really take back the country the way it was before the revolution. I hope that they have a revolution about the revolution. That'd be great. But so we saw a big spike in oil today. And Blake talked about interest rates. I'm going to go to the 20-year. And so also you see that the interest rates have been rising. So those things are inflationary problems that we could be facing. And that means it costs more money for businesses to do business that are tied to interest rates, energy costs, which most companies are. So that could put a little bit of a headwind for us and maybe rain on my optimism for a 7,600 in the month of July. But we might, it might surprise us and things will turn around here before the end of the month. But we are definitely in a little flat mode, as you can see. Really going from May till now has been, and so we're seeing a rotation though out of those tech names that everyone loves, the Microns and the Nvidias. Micron's been the big leader, and so that's gone down a little bit. Another one that a lot of our clients hold is ARM Holdings. And I had a client say, "Why was my account down in last month?" And they had a big holding in ARM, and so you could see that ARM has come down over 30% in the last month, although the huge gains in it. So we're kind of put a line in the sand here. If it breaks down below this, we're going to start cutting it. So that's kind of the plan there. So on the tech front rotations, what do you think, Blake?
Yeah, that's another reason I'm interested in watching closely these upcoming bank earnings, is because we're seeing that, all these gains that people have had in tech, as, the sector starts to slow down, um, people are looking for, hey, where am I going to move this money? Where am I going to be buying? So if we do see strong numbers in the financial sector, I think it's well positioned for growth. If you look at the year-to-date chart on the S&P financial sector, it's basically break even. I think it's up 2 or 3% year to date, and so this is a
Oh,
position
look at
where
that. Hmm.
And it's not, overextended like we're feeling in some of these tech names. We don't have the same hype buildup and like we've had in semiconductors and we had in memory and we had in space stocks. And so this might be the next place, assuming the numbers this next week look good.
So, thanks for bringing this to my attention. I haven't looked at the 1-year chart. I've been looking at the 6-month chart, but yeah, we are right there at what we would call the end of a cup. So it's not uncommon for us when we have this cupping shape here, this technical analysis, that we'd have what we call a handle on it. So to have a little pullback is possible as it kind of get rejected from this high. It has to regroup and then take a second run at it. It's very possible that that could happen. Um, we are big fans of Goldman Sachs. We have a lot of clients in Goldman Sachs, owned it for years, and it's just phenomenal. And you look at this chart. So tomorrow, but this is a little head and shoulders ish with the lower shoulder on this right side. That's also not the greatest sign in the world. But we are long term investors. We plan on holding on to it. I want to take a little trip down dividend lane, if we don't mind, and talk about just dividends. So even here's a 5-year chart, and let's go back to the year 2021, and that's a 169% gain for you sports fans out there. It's pretty good. But let's talk about the dividend growth. If you had bought this 5 years ago, you had had a $2 per share dividend per quarter. So $2 for every share. And look at this. The following year, it went to 250. Then it went to 275 before the year was even out. Then it went to $3. Then it went to $4. Now we're at $4.50 is the dividend. We've gone from $2 to $4.50. So let's just put that in perspective. Say you had a job that was paying you $20,000 a year, and 4 years later, it's paying you $4,500 a year. That is the equivalent of this dividend growth that you basically, for holding on to a stock this long, you basically are getting 150% more than what you would have gotten in dividends. So don't ever underestimate the power of dividends and also reinvesting and buying more shares along the way. Always a good thing to be doing. So as a default, we always do dividend reinvesting.
Yeah, looking between the banks, I do think Goldman Sachs is the strongest that we've seen. It's been the best performer year to date. So as we're looking in the financial sector, we're looking at all of them, obviously. But Goldman Sachs might be our favorite right now. We'll have to see if they hold up with their earnings report.
Yep. So we'll know tomorrow, and there is a lot of headwind here. So and it does have very high expectations. Hey, we do this each week just to kind of let mostly for our clients. If you happen to stumble upon us hey, these guys look interesting, maybe I'll see what they have to say about it. But it's really for my clients to see our clients, Blake and I, we work together, obviously, to know what we're thinking about. Are they paying attention? Yes, we're watching the market every day. But most of our clients are highly diversified. They have, we use a diversification strategy to help people become, more stable in their portfolio, more predictable. But we know when you're diversified, you're going to have average performance. You're in the averages. It's going to be average. So we do layer in a level of individual stocks that we feel will outperform the marketplace. And our ideal situation is we buy high quality companies that we can hold on to for long periods of time and just stay with it. But of course, when you're buying individual stocks, you have the potential for higher gains because of it. But you also have to have an exit strategy and you have to be able watching it, which is why people just do indexes. So they don't have to pay attention. They're just going to be with the market, blah, blah, blah. So I wanted you to be aware of kind of what our strategy is and what we're doing. So we have diversification for protection, and then we have individual stocks for growth and concentration into areas where we can grow people's portfolio. So we do a seminar about every other month, and we're going to have one out in Roseville, I think in August. So if you're interested in retirement readiness, if you're coming close to Medicare and you're getting close to 65 and you need to sign up for that, we work with a specialist that talks about all the ins and outs of that. So you can have confidence when you make a decision when you turn 65 and go on Medicare. So a little Medicare class. And so if you're interested in that, give us a call. Blake, you want to round us up and you have anything else you want to share?
Yeah, thanks so much for joining us today. We look forward to sharing with you every week. Reminder, if you'd like to contact us, you have questions, and maybe see if we could be of service in your situation, or just pick our brains, our contact information is in the description below. Thanks so much for joining, and we'll see you next week.
Thank you for being with us. Have a great week. We love you.